Hi, I'm Denise McGrew, broker-owner of Intero Real Estate Services in Brentwood, California. I get asked on almost a daily basis what is happening with the real estate market in the Brentwood, Antioch, Oakley area. So let me take a few minutes to share with you all the changes that we are seeing. But first, let's go back a few years. The market started dropping out at the end of 2006. We saw housing values dropping dramatically, anywhere from 20 to 30% a year, and that continued for over 2 years. The typical real estate cycle lasts 7 to 10 years. Well, we are 7 years into this cycle, and all signs are pointing to a housing recovery in our area, with some hefty appreciation over the last year. Let's take a look at some numbers.
Here is a graph representing the average sales price in Pittsburgh, Antioch, Oakley, Brentwood, and Discovery Bay combined. Take a look back to the first quarter of 2007. The average sales price was over $500,000. Then it drops to its lowest point in the first quarter of 2009, hovering just a tad bit over $200,000. Then you can see that the values for the following 3 years had slight appreciation and slight depreciation, but the overall trend was stable. Then the market really started to change. The first quarter of 2012, we started seeing record low housing inventory, increased buyer demand, and prices started rising. Take a look at this graph, which represents Brentwood only. Starting from January of 2012 through February 2013, prices are up nearly $100,000. That's about a 19% increase in just over a year. And the same thing is happening in Oakley, Antioch, and Pittsburgh. The bottom line is, if you purchased a house between January of 2009 and January of 2012, you likely have between $50,000 to $100,000 of equity in your house.
This is causing multiple offers on nearly every property and offers for substantially over the asking price. I'm talking about $20,000 to $40,000 over the asking price. And recently I've seen buyers so desperate to get a house that they're waiving their appraisal contingencies and are willing to pay the difference between the appraised value and the purchase price. So what's causing this rapid appreciation? Well, there are several factors. The major driving force of real estate is caused by supply and demand. We're in a market that has historically low inventory rates and extremely high buyer demand. I would estimate that every house that comes on the market, there are approximately 15 to 20 buyers waiting for that house. On the buying side, we have incredibly low interest rates, which is causing many home buyers to jump in the market and take advantage of such. We have buyers who lost their home over 3 years ago from short sale foreclosure who are now re-entering the market as buyers. We have a lot of out-of-the-area investors who are coming in and buying up homes with high down payments or cash. Let's take a look at a graph for the seller side.
This graph represents the type of sales that have occurred over the past several years. The bank-owned properties are tapering off, short sales are still around but are also declining. With the bank-owned listing inventory tapering off, it is contributing to the lack of housing inventory. That leaves the traditional seller, many of which likely purchased their home within the last few years and are not ready to move just yet. As you can see, this green line, which represents the traditional seller, has now risen above the bank-owned and short sales. Note the trend of the short sales and the bank-owns. They are both continuing to decline.
Hopefully that gives you an idea of where the local real estate market currently is. So you ask, well, Denise, where is it headed? Well, while I don't have a crystal ball to predict, my professional opinion is this. We simply cannot continue to sustain the current rate of appreciation. With home values rising so rapidly, many buyers are beginning to get priced out of the market. In addition, I believe that by mid-year, we will see the investor buyers starting to disappear. It just won't make sense for them to purchase here. The rental market is starting to soften up, rental rates are lowering, and it is taking longer and longer for properties to be rented out. Between the lower rents and the higher vacancy rates, it just won't make financial sense for the investors here anymore. So that will lower our buyer demand. Then we have the supply issue. I believe we will see more listings making their way on the market because anyone who has purchased in the last 4 years has equity in their home and they can sell. You ask, well, how many people could that really be? 8,300 homes were purchased in Antioch, Oakley, and Brentwood alone between January of 2009 and June of 2011. That's right, 8,300 homes. That's a lot of potential sellers. So there you have it. I believe we will see decreased buyer demand and some increased supply, and when you mix both of those together, I believe we will enter into more of a balanced market by the end of the year. I hope you found this information useful, and if you have any questions or would like to know how much your home is worth, I welcome a call or an email from you. Take care and have a great day.